Good evening, everyone. Welcome to this channel. Today we'll be talking about dividends. Just to demystify about taxation of dividends. So dividends, what we are saying is a percentage of the share of the gains or profits of a company, which is distributed to the shareholders. You realize shareholders invest money in companies and they expect a return at the end of the day. So we're saying dividends is that share of the profits which is now then distributed to its members when the company is in a profitable position. So our concern today is mainly to dive into the taxation of those dividends. And of course, the tax which is effective here is income tax. And this is guided by the Income Tax Act. So we look at the charging section. What is the charging section for dividend income? And the charging section is basically the section 32B to the Income Tax Act, which then stipulates that a tax will be charged on those dividends which are payable or distributed to the shareholders. As a result, then we are saying a dividend paid by a resident company shall be deemed to be income of the year of income in which it was payable. This is guided by the tax provision that dividend paid by a resident company to its shareholders will be deemed to be income for that year of income in which it is payable. So this is when the AGM has been held and a resolution has been passed to distribute the dividends. In that case, then that is the year of income under which that dividend then becomes chargeable to tax. So secondly, we need to then explain to ourselves, when do we deem that distribution of dividends has taken place? At what point do we conclude that there's a distribution or there's a dividends payable? So for tax purpose, what we look at, number one, we'll ask the question, is there any cash distribution or any asset which has been distributed or transferred by the company to or for the benefit of its shareholders or related parties to the shareholder? So in the event the company makes cash payout or there's an asset being transferred to the shareholder or a related party to the shareholder, then at that point we'll deem that there is a payment of dividend which needs then to be brought to charge for tax. Number two is in the event the shareholder or any related party to that shareholder is discharged of any obligation measurable in money which is owed by that shareholder or related party. So in the event there was a loan obligation, for example, there's an advance which had been made to the shareholder or the related party, and it happens that that obligation has been waived by the company, then that will be deemed to be a dividend payment. And so should be brought to charge under section 32B. Number three, we're saying is that the amount is used by the company in any manner for the benefit of the shareholder or any party related to the shareholder. So in the case where there's any amount which is used by the company, say to settle an expense or to settle an account on behalf of that shareholder or a related party to the shareholder, then we will deem that there is a distribution of dividends, and so it should be brought to charge. The other instance where we can deem that there is dividend payment is where any debt owed by the shareholder or the related party to a third party is settled by the company. So in the event the company settles a debt or an obligation for the shareholder or its related party, then at that point we'll deem that there has been a distribution of dividends, and then hence that amount should be brought to charge. So having introduced to us what dividends is, the charging section of the tax provision governing taxation of dividend income, and the points at which we deem that dividends has been paid, let's then discuss the categories of dividends, the categorization of dividends for purpose of taxation. Allow me to take you through the first category, which we refer to as exempt dividends. So these dividends, we are saying, notwithstanding the provision of section 32B, these dividends will not be subject to tax. It will be deemed that these dividends is not subject to tax, especially when there's dividend, or specifically when there's dividend received by a resident company, where the receiver controls more than 12.5% of the paying company, where the receiver controls more than 12.5% stake or the voting power in that company, then that distribution will be exempt from tax. It will be exempt from the charge under section 32B. The other category which we'll be discussing is what we refer to as qualifying dividends. So qualifying dividends is dividends not exempted. First of all, dividends not exempted from section 32B. So first of all, it is not an exempt dividend. And number two, it's not dividends which is distributed by a designated cooperative society charged to tax under section 19A 1, 2 and section 19A 3. So let me just repeat. So the first, we need to understand that qualifying dividends is any dividends paid out other than one, the exempt dividends, which you've discussed, it's a first category. Then the other dividends which don't fall under this category is dividends paid out by a designated cooperative society subject to tax under section 19A2 or section 19A3. So this basically is dividends distributed by a designated secondary cooperative society and a designated primary cooperative society, which is subject to tax under section 19A. Those two societies, their dividends then will not fall under qualifying dividends. What do we mean by qualifying dividends? So qualifying dividends means the withholding tax which has been deducted at source is final tax, meaning it's not subject to tax further in the hands of the receiver. That is why we're referring it to as qualifying dividends. And the rate of tax, the rate of withholding tax is 5%, which is final tax. Now the third category following that sequence is what we refer to as non-qualifying dividends. And this non-qualifying dividends is these dividends received from those designated cooperative societies are brought to tax under section 19A2 and section 19A3. Those dividends are non-qualifying, meaning the receiver will have to assess those dividends to further tax in their hands. So withholding tax which was deducted as source is not final tax. We will subject it further to tax in the hands of the receiver. Now, who are the parties who are exempt from the other instances of exemption from tax? Number one is dividends paid out by a company undertaking the manufacture of human vaccines. And when these payments are made to non-residents, that will be exempt from tax. Number two is dividends paid by SEZ enterprises, developers and operators licensed under the SEZ Act. Those dividends, whether paid to residents or non-resident, will be exempt from taxation. We need to mention also on the extractive sector, for mining operations, geothermal operations, and petroleum operations, dividends paid to subcontractors, payments made to subcontractors will attract withholding tax at the rate. So payment of dividends to those subcontractors will attract dividends at the rate of 10% for non-residents. Lastly, we need to consider dividends distributed from gains or profits which have not been brought to charge to tax. This distribution, we're saying, if there is such a distribution of dividends from gains or profits which have not been brought to tax, then that needs to be assessed. That income upon which the distribution was made needs to be assessed for tax. So basically we're saying where a dividend is distributed out of a gain or a profit on which no tax is paid, the company distributing the dividend shall be charged to tax in the year of income in which the dividends are distributed at the resident corporate rate, a tax on the gains or profits which such dividends are distributed. That's what we are saying. So there cannot be a distribution of dividends out of gains or profits which have not been assessed for tax. That will amount to actually a case of avoidance of tax. So the Income Tax Act is very clear on dealing with distribution of dividends out of incomes which have not been brought to charge. So that marks the end of our discussion today on taxation of dividends. Be on the lookout for more information with respect to taxation and tax administration in Kenya. Thank you for watching.